So you're a loan officer,
I am.
and this market is absolutely crazy.
It's insane. You know, I was over with Andy, and him and I are still very good friends and sharing leads. You know,
You're talking about Andy Wood, the renovation home loan guy.
Right.
Gotcha.
So now I'm over at Service First Bank.
Okay.
So don't let the word bank scare you. We can do portfolio loans. I'm doing one right now with, of course, a client who makes $1 bazillion and shows no income. I love those. So we can figure it out on that side. But otherwise, I'm given, I work with different lending companies, so I can give pretty competitive quotes. I haven't seen anybody beat me yet.
You have anybody that can do a loan for a guy that makes a ton of money but has bad credit?
What's bad credit?
Like under 600?
Yeah, we can do 680.
Under
600. I'd have to see the whole thing. I can make a case because, oddly enough, COVID might work in our favor. Depends upon the business that you're in. If you can see stuff happened and he couldn't pay a bill, or the one I'm working with right now, he has a lower credit score because he just makes $1 bazillion and forgets to pay his bills. So it's not that he doesn't have the money. He needs an assistant
just not organized
to pay the bills. Right?
Okay. One of the things I wanted to, Mike says, how do I pay income taxes every 2 years instead of annually? No, that doesn't work either. I'm hearing a lot of people asking me, should I refinance? I'm at 3.5% now and I can go to 2.875. What's your advice in a situation like that?
You want to go down at least a point for it to make sense. And the rates are kind of creeping back up. I mean, 2 weeks ago, I was locking 2.25s. Now, even with a good credit score, they're coming in at 3.35.
Wow, big change.
Big change.
I always thought the rule of thumb was 2 points.
Nope, 1 point.
1 point.
And then also, what's your objective? There was one that was at a 3, and I could get them to a 2.8. I mean, they were at a 3.5. I could get them to a 2.8, but their goal was they were sitting on a ton of equity, so they wanted a pool. So use that, take it out. Don't do a pool loan. Don't pay for that. Either do a renovation loan or refinance and take that money out. It's yours.
That's right.
It's yours. So
are VA rates doing the same thing?
Yeah, VA rates are pretty in line with all the other conventional
stuff. Cool.
I'll check it this morning when we open, but I mean, it was a jump.
But generally, as a rule of thumb, 1 point, if you can save 1 point, because you're going to spend, in a $300,000 loan, you're going to spend what, $6,000 or $8,000 in closing costs.
Yeah, you're normally looking between 2 and 4% of the loan amount for closing costs.
So most people add that to their principal balance, so their balance goes up, but their payment goes down.
Right, but another fun thing that I've gotten a lot of my clients to do, which makes sense, as far as the closing costs, you're going to have to pay for title. There's just nothing you can do about that. The insurance, homeowners insurance and property taxes, you're going to have to pay them. So it's a moving of the shelves game, right? So if you can just set up your own mental account and put money over there to pay them yourself, that's going to save thousands and thousands of dollars in closing costs.
Say that again.
If you don't escrow, if you say, I'm not going to escrow, I'm going to be disciplined, I'm going to pay my property taxes on my own every year, I'm going to pay my insurance on my own every year, because you're paying for that.
Okay, it's not saving on closing costs, it's saving on your escrows. I got you. Okay.
Well, it's saving on money out. So if you have
cash out,
you don't have to raise the loan amount to cover these taxes. So you're paying on the loan amount for these taxes that you're going to have to pay anyway. So just put that money to the side.
I've never escrowed my taxes or insurance, but when I refinanced the last time, they actually made me escrow my flood insurance.
Flood insurance, you have to.
I never had to before, but I do
They're
now.
like, yeah, most lenders are like, you can do anything, but not flood insurance.
Okay, so you're in the industry. This is a weighted question. How aware are you of the flood insurance changes that go into effect tomorrow?
I know. I am holding my breath. I am not believing it until I see it. I mean, all of this came at us
Mhm.
pretty quick. It's huge. I was talking to your brother Jeff about this yesterday. It's gonna stay capped for us who already have it. But somebody buying a home right now, what does that mean? I don't know.
Well, number one, they're screwed, but let's go back to those of us who have it now. How do you think the lender is going to consider my actuarial flood insurance rate is $10,000 a year?
Yep.
I'm only paying 1,000 now. I'm going to pay 18% more per year. How are they going to factor that into my PITI for my qualifications?
They will. That's 100% of it.
So they're going to look at the total
Yep.
actuary, even though I'm not there 10 years from now.
Oh, no, they'll look at what you're paying right now.
Okay, but next year it goes up 18%, and then the year
Yep.
after that goes up 18%. The year after that it goes 18%. The year after that it goes 18%. 10 years from now, I'm paying,
Yep.
$500 a month for flood insurance, and I'm not done.
Easily. I would say 5 years from now, you're not living in a flood zone. I'd move out. I mean, I'm hoping
I'll
that,
just pay off my mortgage.
right?
I'll just self-insure at that point.
I know it's scary. It really doesn't seem possible that they can do this. I don't know if it will go. I mean, they had it 5 years ago where they were saying the same thing, and then it just kind of went away, right? And
Well,
yet
I've actually done a lot of research and talked to a lot of the higher ups at FEMA and at NAR, and it's actually a pretty solid program. What they're doing is they're shifting the risk to those who are more prone to flood.
right.
So there's a lot of examples of homes that have flooded numerous times, and they've made $40,000 or $50,000 flood claims multiple years in a row. But they're grandfathered in, only paying $1,000 or $2,000 a year for flood insurance. They've made hundreds of thousands of dollars worth of claims.
Right.
And then there's a guy like me who's never made a claim in 20
Right.
years,
Right.
and I'm going to get hosed. But
Yep.
and then so what I went to NAR for and got to FEMA was the chance of my house actually flooding, because I'm 5 feet above the floodplain, is non-existent. And then I found out, and this is
It doesn't matter. Right.
well, it does. It does. You can use your elevate. They don't use an elevation certificate, and they don't use your flood zone to rate you now. They're rating you on proximity to the water, which really changes a lot of our South Tampa buyers, because if you're near Bayshore, you're near the water.
Yeah.
Right.
I'm in a flood zone, and
If you're near West Shore, you're near the water.
Yep.
And flood doesn't discourage. It doesn't discriminate. It doesn't stop at one side of the street. If you're on Culberth Isles, it doesn't mean it doesn't cross West Shore and go on to the next neighborhood.
I know.
So, yeah, so this is actually, it's a more relevant, but they haven't worked out the kinks yet.
Right.
And they're willing to do that, which is kind of
Right.
cool. So I think changes will come. It doesn't go into effect until April for the existing policy owners, just for new owners.
Right.
And I did talk to them about the new construction, because I got some new construction we're building on the water. And there's a lot of mitigating circumstances we can do to reduce the premium substantially.
Good.
And then the other good news is Florida has a plethora of third-party insurers.
Yeah.
And so as long as the lenders, that's the question for you too. Will the lenders accept a third-party insurer? Does it have to be a national flood insurance backed program, NFIP backed program?
No, they'll take anybody that will insure them. It can't be, like hard money lending in the insurance world, but,
Right.
and there'll be minimums, you have to have this amount of coverage.
Okay, well, then that solves the problem, because my NFIP is 1,000. It goes up 18% a year to actuarial rate at $10,000. But I've got a third-party carrier who will insure me for $650 a year. Guess where I'm going?
Yeah.
Bye-bye NFIP, right?
Yeah. Right.
Cool. But anyway, that's not what we were going to talk about today.
I know, but that's a big one. That's a big one. Once we get all the numbers straight and the kinks worked out and we've got stuff in writing, we need to figure that out, because as realtors, you really need to know if they're in a flood zone. The very first house that, or the house that I live in now on West Shore, my realtor said I wasn't in the flood zone. I was in the flood zone. That adds a lot to my payment. That's a huge deal. So I wish that they would have come to me with, this is what your taxes are looking like. This is what your insurance is looking like. And this is what your flood insurance is looking like.
Hear that, people?
Huh?
I said, hear that, people? The
Yeah.
buyers want to know.
They want to know. Yeah. And I think like if you did an open house sheet, I think it would be great to list those things on it.
Well,
Because
that's not the topic I wanted to jump into. We'll have plenty of time to talk about what we're going to talk about, but this is real. The question is, and this came out of the seminar I attended yesterday, webinar I attended yesterday. The code of ethics has realtors disclose things. So if we're aware, if I'm selling a house on West Shore,
yep,
and I know the current owner is paying, $1,500 a year for flood insurance. But I also know that the new law took place tomorrow,
yep,
and it's going to go up 18% a year
yep.
until it reaches $8,600. Is that something I need to disclose? And the answer is yes.
100%.
100% you need to disclose it. So
Yeah.
how do you disclose what you don't know? You have to find out.
Mhm,
So now as realtors, we're aware of this change.
mhm.
So I just wrote an article. I'll share it with you guys real quick. It's very short, but I write an article every month, and this month I wrote one. It's called Flood Rate 2.0. Here we go again. Perhaps you remember the Biggert Waters Flood Insurance Reform Act of 2012. If not, it was reformed designed to apply flood risk to properties that were more prone to the risk of flooding. Makes sense. What it did until it was repealed was drastically increase the flood insurance cost on homes that weren't built to the current floodplain standards. This literally killed the sale of flood-prone homes, flood-prone sales that were in special flood hazard areas and weren't built to the current standards. The act was repealed and things got back to normal. It literally put the brakes on, and we stopped selling waterfront homes that were what's called pre-firm. None of that matters anymore.
Right.
Since that time, the NFIP has spent the last 5 years studying the situation, and they believe they've come up with a fair rating system to assess flood risk in line with actual forecasted risk. And that's what they believe. And they are open that there's errors that they haven't considered yet, which is big. This article is not intended to give you advice, but rather to urge you to contact your insurance agent to see how the properties you own or the properties you're looking at buying will be affected by the new proposal. Right? We can't tell them. We're not insurance agents, but they better find a damn good one.
Yeah.
In a nutshell, your insurance agent should be able to go to the NFIP system and give you an idea of what your true actuarial flood insurance rate will be. Then your flood insurance rate will potentially increase by up to 18% a year until it reaches the actuarial rate. This is especially important for homeowners who live close to the Gulf, bay, canals, rivers, and lakes, as the new rating system is heavily weighted by proximity to the water, as opposed to the flood zone and base flood elevation that the previous model used. For homeowners who live further away from the water, since your risk of flooding is less, many of you will see declines in the cost of flood insurance, which is true. I'm making our agents aware of this so they in turn can make our buyers aware so they can make informed decisions about your home purchase, and make our sellers aware so they can properly disclose their current flood insurance status. So that's kind of in a nutshell what I think we have to do.
Yeah.
Just, punt to the insurance agent, but make the buyer aware. So our agents can wait for an addendum that's probably going to be mandatory to our contracts, because I don't want, Candace, you said the words I never want to hear. Had I known this,
Yeah.
I wouldn't have done that.
Yep.
So we can't hide these things. These are just lawsuits. They're waiting in the future for us. And
Well, I mean, not only lawsuits, but you want to sell a home. And I'd prefer I not be the one that gets blamed for it when they are no longer qualified for that mortgage.
yeah, that's
because
terrible.
You've got the flood insurance, and oh, by the way, yeah, it's in an HOA and it's $500 a month. I mean, tell them everything. I'd like to be able to partner with the agents to know, okay, oh, I'm working with this agent. They're gonna tell this client everything and I'm gonna know everything, as opposed to having to do the research after the fact. When I ask the people to send me the address and I look, I'm like, you do know it's in a flood zone, right? I mean, this could be a deal breaker.
Well, we won't even be able to tell anymore because flood zones are irrelevant. It's based on the National Flood Insurance Program's rating system that judges how close they are to the water.
Okay, so we're gonna have to be researching. I mean, that's part of our job. That's
Well,
what
I'm telling my agents now, when you get a listing,
Yep.
go get an insurance quote on that house.
That's
And if
right.
it's low, market the fact that it's low because the house is worth more. If it's
Right.
high, tell the truth and let the buyer judge.
That's
You know,
right.
me personally, if my insurance went to $10,000 a year, which it never will because I'm a third party, I would still stay in my house because I'd pay $1,000 a month to keep my boat behind my house. Right? So it's going to be, that's it. So, but a buyer has to make that conscious decision. And if they need
Right.
to have that qualification in their debt to income ratio, then they can't buy the house.
Right.
So you could argue that the house is worth less than it was before this law took place.
Yeah.
Not worthless, but I
Right.
pause, worth less, you know?
Right. Yeah. It's a big deal.
Mike, I'm still looking into condos. I haven't gotten good clarification yet on velocity zones or condo commercial policies yet. So, but I'm still talking to these people, so we'll get more as it comes. Donna said Senator Rubio has introduced a bill to delay the increase to September of 22. That'd be nice. Yeah, this bill is not passed, by the way. It's due to be go into effect tomorrow. But the Senate has been sitting on their hands for the flood insurance bills for every year since 2013. So
That's right.
it may not pass. There may not,
Right.
but if it doesn't pass, then the NFIP shuts down, which means we go straight to third-party carriers only. But as long as the lenders accept third parties, this problem really isn't that big.
Yeah.
But it's a statement because the third-party insurers are probably going to adopt the rating system that the NFIP uses, which means their rates are going to go up too.
Yep.
So, because they're insurance companies and that's what they do. But what a nice segue, Candace, because we're talking about people qualifying for houses and it's principal, insurance, taxes, PITI.
Yeah. Taxes,
And
property taxes, insurance, principal and interest.
Principal, interest, taxes, insurance, PITI, and HOA are
Right.
included in their ratios.
Right.
And one of the things that's happening now is property taxes. I was talking to an agent yesterday and the customer is saying, what are my property taxes going to be next year? Now, this is a $3.6 million house,
Yep.
right? And if you look at the property taxes, the owner had homestead for decades before. So they're only paying like $12,000 a year. I'm making up these numbers, but
Right.
they're paying $12,000 a year. So the homeowner looks at the MLS sheet and says, oh, taxes are $12,000.
Right.
Well, no,
No.
this is in Anna Marie Island. It's a $3.6 million house. The millage rate's about 20. So potentially you're looking at 3.6 times 2, $70,000 potential income tax. But
Yeah.
they're looking at an MLS sheet that says 12
Yeah.
and the house is worth 3.6 million, but last year it was worth 2.5 million.
Yeah.
So it's a big deal,
It's a
right?
big deal. It's a
And but
huge deal.
homeowners have an opportunity to go to the tax man and raise their hand and say, I don't agree with your assessed value of my property.
Yeah.
That happened to me once. We own the buildings where the corporate office is. And my tax bill, after we purchased it, we spent a lot of money fixing it up. The tax bill came in, it was like $80,000 a year. And I'm like, there's no way, because in the past it was way less than that. And so I called my attorney to sue the county, right? And my attorney says, Craig, no. Just call the appraiser's office. Just call the appraiser's office and raise the issue. And I did. And I sent them my profit and loss statement because it was a rental property. And they dropped my taxes like by 2/3
Wow.
because they just made a mistake. They just assumed that it sold for X amount of dollars and it would rent for all this. And when I showed them what it actually rented for, they were super nice and it was really easy to get done.
Perfect. That's a great example.
Yes. So that
Yeah.
happened in real life to me.
Good.
But I think our homeowners now with the rates, I mean, properties have gone up, Jeff, we'll talk about micro markets. You can't say the market has gone up 20%, but some markets have gone up in excess of 20% this year.
Yeah. Mhm.
So when the tax man goes, ooh, your house is worth 800,000 last year and now it's worth $1.2 million, we're going to jump your taxes up. So I steal your thunder, but
No, it's okay.
your turn.
Somebody just asked what the property taxes go up a year. They're capped
It
at
depends.
3%.
For homesteaded properties only.
Right. When you purchase it, you start from ground zero. So that's a big thing that we need to look at, and we need to be telling the clients when they're looking at a property is what the proposed is. Right now, we only know the proposed, but they need to know what's coming. I mean, this is the way people qualify for a mortgage is debt to income, period. I don't care if you have $1 bazillion in savings and you have two million in retirement and you get $50 million worth of dividends. It doesn't matter. It's what you're bringing in, what your income is versus and against what's going out. Debt to income. That's it. So I know people get frustrated when they send somebody and they're like, well, he's totally qualified. He owns a business. They make $1 million. He lives in a $10 bazillion house. Well,
He doesn't show any income.
He doesn't show any income. So
Pay cash for the house if you're that rich.
I am working with a gentleman right now that's going to refinance his house. It's $3.8 million in Sarasota. And he wrote everything off. He's got more money than, I mean, I've never seen a bank account like it. I really haven't. It's insane. But he needs to get out of his mortgage that he's with right now. That's at 11%. 11%. And it's due in a year. So they're going to make it come due in a year. So that just like, if you have to get your clients to go with their accountant and say, look, I want to buy a house, set my taxes up for the next year. So it shows the money that I'm making, you're either going to pay it now or you're going to pay the taxes later. It's always a shell game. So people think, let's write everything off. If you want to buy a house, don't do that. Just to let your clients know.
I'm seeing some words in the chat I just wanted to address. Celeste wrote, taxes are capped at 3%. No, they're not. That's absolutely a false statement. Taxes are capped at 3% if you're homesteaded for that current year.
Right.
And that's the big problem that a lot of agents don't explain to customers. Excuse me. My house, as an example, my assessed value, I'll tell you right now, I think it's like $400,000. Which house is this? Yeah. So my assessed value is $429,000. My house is worth more like $1 million.
Yeah, there's assessment and there's value. Yeah.
But it went up. It was worth over $1 million. It crashed in the 2008 decline. And when it crashed, the values fell. So they lowered my assessed value. But I live in my house as my primary home. So the increase is capped at 3% a year. So when it fell into the 400s, it can't go up more than 3% a year.
Right.
So somebody shopping in the market today on the MLS is my house and my taxes are, $8,000 a year. What a bargain. But the guy next door to me bought his house last year for $1.2 million, and his taxes are $24,000 a year. That's so mine looks like a discount, but as soon as mine sells, the tax man is going to reassess my house and jump it right back up because they can.
Yep.
Right.
Right.
And there's another thing that a lot of people don't know is, let's say I bought another house before I sell this one. I can take my homestead from this house to my new house and leave this house without homestead for this current year. So the jump will happen even faster for the new buyer.
Right.
So lots of little things like that a lot of people don't know. And then Mike wrote, I thought it was 3%. So what do you do if your homestead taxes go up by 6%? Well, they can't.
They
So-
can't. Yeah. Right. Yeah, I think the difference is saying they are capped at 3% when you live there, when you own the house. But when you as a realtor are showing a house to a new person, you're probably familiar with the link, but you can go on to your property appraiser site and you can say, I'm looking at this house. What are the property taxes? What would the property taxes be if I owned it? Don't look at what the property taxes are right now, because that's only based on, like, I've been in my house for 12 years. We sell it as soon as Lil Parker goes off to college, we're out of here. Matt and I will sell it, be gone, and those property taxes are gonna look nothing like ours.
Right.
And it's huge. Like for me, and I know for you as a mortgage officer, I don't want to just be reactive. I want to be the advocate. I want to be the problem solver. I want to be the educator, the protector. I want to see things and know things that homeowners don't. We're in the business so much. I think we forget to go back to take it down. 101, talk to somebody, super basic, until they go, I already know that. And then you say, okay, I want you to know everything. Because a lot of people don't. I'm working with a first-time home buyer right now. She's freaking out. Like, how does this work? What does this mean? Am I going to have to pay this? And like, what does that do to my monthly payment? Because a lot of people are just looking at their monthly payment and what they can afford. Oh, it's going to do a lot. It's going to do a lot if I don't and the agents don't have the correct information.
Mm-hmm.
You got to know what the cost is going to be for taxes, especially, I mean, in South Tampa, on the water, at the beach, it's a big deal for us. We're in a market that it really, really, really matters.
Yeah, when you see 20% appreciation in a year, especially with foreign or out of town owners, they're going to lose that homestead and their taxes are going to go through the roof.
Through the roof. And they have to know it.
Chris asked me, so what's your market value shown in the property appraiser's office? Strategically, is it possible to argue with the appraiser to increase the listed market value on your homestead in case you want to sell and take the tax savings with you on your next house?
Interesting.
But that's backwards. I want it to be as low as it can be because I want the gap between the assessed value and what I sell it for to be as big as possible. Right. If I took it higher, my portability would be less. So I want to keep it as low as possible. So Chris, that doesn't, if I understand your question right, that doesn't flow. I don't want to increase my assessed value because it would lower my gap that I'd port to another house. Chris said, for example, my assessed value is around 200, market value is at 250, but true market is 450. No. It's the market. It's what you sell the house for versus your assessed value, not their market value versus your assessed value.
Right. The assessed value and a market value are two totally different things.
Yeah, but the gap is determined by the sale price and your assessed value, not their market value and assessed value.
Well, I have a little slideshow. You want me to get into that?
Yep.
All right. Let's see if I can do it. Wish me luck. I'm going in.
Share screen. It's not easy. Hit the green button. I think this is my 17th Zoom meeting this week.
Oh my gosh. Okay. Well, now I can't move this thing, my control panel.
Yeah, you can just click on it and drag it.
Okay, I got it. But where to go? Okay. Let's go home. I don't want a new slideshow.
Just move your slider up. You're on slide 13 now.
Yep. Okay, slideshow. From the beginning. Okay. Everybody see it?
Yep.
Okay. So we're going to talk about appealing your taxes, and we I'm going to get you teed up for the next year. This is probably something that would be good to keep track of with clients that you're working with right now. So you can come back to them at tax time after you sold them the house, still staying engaged with them, because most of the time people don't keep their houses forever. So if you've already worked hard to get a client, work hard to keep them. Keep touching base with them, check in with them, let them know what's going on, and this is a good way to do it.
Let me just comment, because I just want to drive the point home. Your past clients are worth a lot of money.
A lot. Mm-hmm.
If you stay in touch with them. So we're trying to give you reasons to stay in touch. And this is a great one. Hey guys, the trim notices just came out.
Yeah.
Right. So people have taxes on their mind right now. So if you can provide value in that way, talk to them, text them, phone them, post about them, get them to talk to you.
Right. And also just put another just side note that I do is if I am working a deal and somebody closes on a property, I kind of put a ticker in my file to reach out to them at the first of the year and say, hey, just want to make sure that you filed your homestead exemption. Because I've got somebody coming in from Wisconsin and they don't know that. It's super easy. You just have to go online and do it, but you have to go online and do it.
Yep.
So just another reason to reach back out to your clients, make sure they filed it. So property taxes are going to obviously make it a little bit harder to, not harder to sell a property, but it's going to involve more. And our taxes, and I live in South Tampa, they're ridiculous. So the
Hillsborough County is like the highest millage rate in the state of Florida.
It's unreal. It's unreal. And I live in the district that everybody wants to be in, that elementary, middle, and high school. So the reason people will pay the taxes is because they want to be in that district. But I mean, it makes a difference. So appealing your taxes, knowing your escrow rebates and payment amounts, you need to, like we talked about earlier. So here it is. Properties are assessed on January 1st. That's when we get the final numbers. You are going to see them in the mail the second week of August, the year before, or obviously the year after. That's when everybody's starting to get their notice. So everybody's got it in hand right now. So here's the fun part. The appeals have to be filed by September 2nd, between the 2nd and the 18th. Or you have to track it by looking at your trim notice within 25 days of them mailing the notice. So you cannot, yeah, you cannot get this trim notice and go, I'm going to appeal it. Get yourself together, starting with your clients in May. If they are dealing with their bill right now and it's going to get assessed in January, there's nothing you can do. But what you can do is look at it for that. You can look at the trim notice online, look at them and look it over. One thing, well, we'll get to that, but know that you have 25 days period, end of discussion. They do not care. You cannot go outside of that. They will not make an exception. And they don't tell you in big letters. They write it at the very, very, very tiny bottom. It says, if you have a problem, you have to get to us. That's what they said. So again, you've got to
go back one slide because I had a question for you there.
Yeah.
So it's too late to apply for appeals right now. It's
right
just
now,
knowledge.
it's too late.
Missed it.
Yeah. And it's going to take some work. So yeah, we're going to have to wait another year, but now you know. And if you're selling a house between now and by the next time they get their trim notice, you print it off. You go on there, go to the property appraiser site, look at their past bill and look it over. We'll get to a bill. I'll show you. All right, assessments are based on a percentage of the market value. Okay, so it's not the value of the home. They're not assessed. If you sell it for $1 million, they're not assessed at $1 million. We all know that.
The rule of thumb used to be about 80%.
Okay,
but that's nothing more than a rule of thumb.
right. But it's not gonna be, so people, if somebody says, am I gonna get assessed at my purchase? No, they don't assess it at that. Assessor's office takes the number and multiplies it by the tax assessment to determine the taxes. And that would be in the property appraiser site. So the value of your home, let me move my little screen, is what is likely to sell. So the value is what it would sell for, comparable sales in the area. That's when you get the appraisal that you have in hand. And I hope that all of you agents, if you can get your hands on an appraisal of a property that you're doing, that you look at it with a fine tooth comb. That's going to be up to the buyer if they want to share that with you. But if you want to get knee deep into it and you ask them for it and they're fine with it, look at it, see what they're saying, because there might be a problem with the appraisal. I look at them, but if you're selling the house and I'm dealing with somebody in Sarasota, I don't know that market. You as a realtor, if you're working in Sarasota, would know that market. So look over the appraisal. All right, let's see. So
Mike just asked, can the closing agent help the buyer file for homestead? I know at Paramount, we make it it's a standard thing. We remind them to do it at closing, but they actually have to go online and do it.
Yeah, they have to go on and do
We
it.
can't do it for them.
Right. And it's simple process and it's more of a check-in, like, hey, don't forget to do it. All you do is log in, click a couple buttons. It doesn't take long at all, but you have to make sure you do it. And some people just assume, they're like, I bought the house. I said it was my primary. It's my primary resident. Why wouldn't it be homestead? Well, because you didn't apply.
Exactly. Very important.
Very
Mike says, is it based on square feet or number of beds and bath? Yes.
Yeah.
It's based on market value.
Right.
And this is where you get to argue. So if you don't agree with your assessed value, you would go to the property appraiser and say, hey, that house sold for more, but it had more bedrooms than mine, and they might have overlooked it.
Yep.
Remember, they're assessing every single property in the county.
Yeah.
It's very easy to make mistakes.
Yep.
I just looked at one. So I bought a house last year for, I think I paid $290, and it just got this year it's assessed at $210. So that's a pretty good rule of thumb, just as an example. So they didn't assess me at the purchase price.
Right.
But I was told somebody yesterday, there was a time when back in, this is like the old days in the 80s, a buyer would come and they'd buy a house for $400,000 and say, here, let's write the contract at 200 and I'll give the seller 200 in cash. Why would you do that? Well, I want the property appraiser to see it only sold for 200. That has nothing to do. Well, first of all, it's fraud.
Right.
Right. It's called fraud.
Let's start with that.
Tax fraud. And secondly, it doesn't matter. The tax assessor is going to assess it at what they deem market value to be. So if you paid 600 for it or you paid 200 for it, it doesn't matter. They're going to assess it at what they assess it at based on other sales in the neighborhood.
Right. So the key things that you're looking for that was just mentioned is the number of bedrooms, right? I mean, these are easy ones to catch and they make mistakes all the time. Like Craig said, they're doing this for all the houses. You don't think they make a mistake? Check, is that the right number of bedrooms? Is that the right number of baths? Check your square footage. That changes. Everybody's doing additions, changing the footprint, lots of, knocking out a bathroom to make a huge walk-in closet. Like, make sure you have that square footage, decks, porches. What's the size of your lot? I mean, that's a big one. Pools or waterfront, and any outbuildings. So that's a super easy scan of you to look at that for your clients. Okay, so knowing all of your exemptions, this is huge. First of all, the first thing that with the property taxes, the discounts that you get, you get 4% discount if you pay in November. So you're going to have to pay it. Just pay it in November. 3% discount on your property insurance bill if you pay in December, 2% in January, 1% in February. And if you pay it in March when it's due, you get no discount. So it's a good way to save money, easy way. The exemptions, make sure that, like we said, everybody's qualifying or checking off for the homestead exemption. Go in and apply $50,000. Senior discounts. Make sure you're checking for that for people over 65. Veterans discounts. Are they considered a disabled veteran? To what degree? 100%. Make sure that they're counting that. Rebates for professions, that's a big one. Police officers, EMTs, that kind of thing. If you have any questions, check with your mortgage officer. And if you don't have a mortgage officer, call me. Energy discounts, that's a big one. Doing the solar, the roofing, wind mitigation, make sure you're getting those. Agriculture discounts.
Let's talk about wind mitt. I mean, I remember I got my wind mitt. I paid $100 for a wind mitt.
Yep.
And I gave it to my insurance agent, and
Yep.
my insurance went down $700 a year.
Same.
So for a $100 investment, I saved $700 a year.
Yep.
Every homeowner should do that.
Yep. If you're going to do it, then you just need a certificate from the roofing company that did that. And you just send that certificate to your insurance agent. Again, don't think that just because you did it, you qualify. Just because you're doing a first property, a primary residence, that you're getting your homestead exemption. No, just make a little list for your clients, check it off. Make sure you've got this. Flood insurance, make sure you know that. That's another one. It just drives me crazy that I can't tell you how many times clients come to me and they say, I have no idea it was in the flood zone. Well, now you don't qualify. And now I'm the bad guy. So help me out here. All right. So can you hire an attorney to do this? You can do like Craig and just say you're going to sue the city, and the attorney says, whoa, just call them. So if you don't want to deal with it, like every, other thing in life, you don't want anything else on your honey-do list. Yeah, you can do it, but they're going to take up to 50% of what they save you. So if you petition and they win, and it reduces your taxes by $1,500, you're going to get a bill up to $750. So you doing it on your own, you telling your client they can do it on their own, you asking your client to join you for coffee one morning with me or by yourself and say, you know what, we got a spreadsheet. We can set this up. We can do it. I can show you how to do it. And then they go back and do it 2 to 4 hours tops. It's a Sunday afternoon. So I'm all about saving money. I'm the one who goes to buy anything online and will not purchase until I search for a discount code. It drives my kids crazy. My kids go to Chick-fil-A, my older one, Maddie, driving. I'm like, did you use your Chick-fil-A app? Because you got a free sandwich in there. So my kids know I'm all about the discounts. So helping you with file your own appeal. 99% of the time, you're going to have an appraisal done on your home. Rarely do you get the waiver, the insurance waiver, property insurance waiver. It's starting to come back now. I don't even want to get into the appraisers right now and what's happening. Nightmare. But grab your old appraisal out. It will show you. Talk with your real estate agent about recent things in the past year that have sold, and you're going to get 3 to 5 properties that are most like yours. And I've got a spreadsheet that I'm happy to send to you all. And then you want to check with the property appraiser's office to see if you can do it online or if you need to bring it in. You're also going to want to make sure that you get confirmation that they received it. Don't assume. That's the big thing. I always assume if I ask somebody to do something and I've crossed it off on my end that I've done it, I assume it's done. It is not done. Everybody knows this, right?
But I sent you an email. It must be done.
Yeah, no, it is not done. I trust no one, but that's the control freak in me. So here is the spreadsheet that I'm happy to send to you. It'll break it out, your property. And these are all the things that we're looking for. Make sure everything's right on your appraiser, on your appraisal. Make sure it's right when you do this. Is it waterfront? Is it how many bedrooms, how many baths, how many half baths, that kind of thing. Happy to send it to you. Tell me if I'm going too fast.
I want to just caution people too. You don't just go appeal your taxes because they could find that it's worth more than they assessed you for too.
Sure.
So Mike asked the question, well, my bedrooms and baths are wrong. It's showing less. Well, if you go in and you cause them to take attention and look at your property,
Right.
they could very well say, whoa, we made a mistake. You should
Absolutely.
be valued at more.
Right.
So this isn't for the faint heart. This is if you really believe you're paying too much in tax.
Right.
You prove to them that you're not. But remember, you're going to cause the eyes to look at you.
Right.
And they could go up too. So that's
Yep.
just a word of caution.
Yeah, that's a huge point, but that's why I'm saying this is how you appeal your taxes.
Mhm.
And if you think your taxes are wrong in your benefit, put your head in the sand and move on. Because
Like my house is actually online. It's bigger than it really is,
yeah.
but it works for me.
Okay, file this appeal in advance. Obviously, let's try not to go to the wire. Ask the assessor's office for help. They have somebody in the office who can walk you through it. Just if you get somebody who's a little cranky pants, then hang up and call back and find somebody who's nice.
Mhm.
And always get receipt and acknowledgement that they've received your appeal. So, and if you win the appeal for your assess and it's reduced, call your mortgage servicer for an escrow analysis. That would be me. If you're not escrowing, which Craig and I were talking about earlier before I think a lot of you all jumped on. Side note, if at all possible, have your clients not escrow their taxes and insurance, because it reduces the closing costs exponentially. Side note, so call me if you have questions.
It's not
on
closing
that.
costs. It's your cash to close. It reduces.
Right, but
Because tax escrows aren't really a closing cost. They're an
right,
escrow.
they're not a closing cost, but they're in there, and it does take your loan
Yep.
amount higher.
Yes.
So don't take your loan amount higher for that. Just make yourself disciplined
But
enough.
make sure you have the money to pay your taxes when they come due.
Yeah, set up your own little private account in a little glass jar under the shed. All right, that's it for me. There's my information. You can call me. I can send you my email. I should have put that on there. It's C.
Why don't you send me your spreadsheet? Because people are asking online for a copy and I'll just send it out for you.
Okay.
So
Sure.
when you send it to me, you can make sure your signature has all your contact information and I
Yep.
will just directly forward it on.
Right. And like I said, if I can ever be of any help to you all, even if you listen, if you've got a mortgage officer that you're working with that you love, I am all about loyalty. I don't like the ones that go around trying to steal other clients, but it's kind of like if you're in a good marriage, you're not going to be looking, right? So if
Well,
you're,
I think it's like a toolbox, right?
yeah, I mean, it just
Different loan offers have different products, like,
absolutely.
not taking any thunder away from you. Andy is really good at home renovation loans.
He's the best. I would,
Right.
if somebody called me, I would say, here's Andy's number. He's amazing.
Grow Financial has an amazing zero down program. And they've got amazing doctor loans. Doctors sometimes can't qualify for a mortgage because their student debt is so high. And Grow won't count their student debt.
I can
Yes.
help. I can help with that too.
Good. Well, so that's the point. So it's like a toolbox.
It's a toolbox. You're right.
So what tools do you have that other people should know about? So I'm just aware, oh, I got a recent doctor out of med school,
Right.
He's gonna make a lot of money, but he's got this damn student debt that's gonna crush his ratios. He can't qualify for much.
Right.
Oh, well, Candace has a doctor program that'll do that.
We've got that helping professionals. We can rock jumbo loans, no problem. FHA, VA conforming mortgages. We are working right now to roll out a program for a one-time closing cost for construction to perm.
Nice.
So there's a lot of building going on in South Tampa. We also, we have the 100% professional mortgages for physicians, attorneys, dentists with no PMI. So I can work on that. Another thing, I don't know how many of your agents get into this, but we have an amazing 100% affordable housing mortgages with no private mortgage for people that are trying to get their first time home and they don't have the cash to pay for the closing cost. We can do 100%, just really working hard to let these people realize their dreams. They just want a home and we can help with that.
Candace, one of the things we're telling our agents now is to really partner with the loan officer
Yes.
through the partnership to, and we're still in multiple offer situations. Maybe it's not multiple offers in one day, but it's multiple offers in multiple days.
Right.
And selecting, we've had agents, the record I've heard of is 123 offers on one property.
Yeah, I saw 99 the other day on one. And that was before it hit the market. The day it hit the market, it had already had 99.
Wow. So one of the things I've asked the agents to do is get with the loan officer and have the loan officer call the listing agent and say, hey, I just want you to know, you're probably gonna have multiple offers on this property. John and Mary, I have thoroughly vetted them.
Yep.
I've seen their tax returns. I've got their pay statements. I've got they're good to go. They're golden.
Yep.
Right. And then we really want to rely on you to have a conversation with the purchaser.
Right.
To have the courage to check box A. This is a
Yep.
cash offer, not subject to financing,
Right.
even though they're getting a loan.
Right.
What would it take for you to feel that comfortable that a borrowing buyer could check cash on a contract? How sure would you have to be to tell them to do that?
To check cash.
Yeah. To waive their financing contingency at the beginning. Ooh, see, guys, this is a scary thing to talk about. But that's happening in the marketplace. There are agents that are saying this is a cash offer because they're so confident their buyer can qualify. But there's so many things that can pop up at the end. And once you waive that contingency and you put a big deposit down, they're screwed if something happens.
Yeah. Yeah. So, I will vet the clients. I like to have the conversation with the real estate agents. As soon as I start working with the client, I reach out to the agents and I want us to stay connected the whole time. I want to call them the night before and say, yep, I've qualified them. They're good. They're beyond good. I can't tell you their financials, but sometimes people are going for the VA loan because they want that. But they don't need it. But I need an agent who can still go to bat. There's no reason VA loan shouldn't be in the running. It's not right. It's really frustrating.
Well, to be fair, the VA loan does require the seller to maybe make some more payments that they shouldn't have done, but that should have been addressed at the time of listing anyway. So
right. And then maybe you can work with that and work things into it. But yeah, I want a relationship. I don't want to be a transaction and then we're done. I want to get in the groove with the real estate agents that I have. And I have a couple that I'm working with you now, like 3 in particular that I love. And we talk all the time and they send me questions. Hey, I heard this is coming out. I answer them. Yes, tell your client that. So I'm a resource. I'm not just there when the transaction is happening and then I'm gone. Like any questions, always reach out to me.
Well, Kim is asking, do you do single wide mobile homes? I'll answer that for you. Probably not.
Yeah, Andy's good.
Andy does those? You're probably on Andy's mailing list. Single wide mobile homes, yes. There's also a big mobile home company. I think it's called Green Tree Financial. They're kind of a mobile home go-to people for anything I found.
Yeah.
Kim asked, how much can you do with 1099 earners?
I do it all day long. I cannot even tell you. The tax returns I get are 18K ones, 14 Schedule E's, and they made, make it so they made 10,000 a year. I can, if they're good and they have the money, I will figure out how to show that they have the money.
Are veterinarians included in the doctor's program?
We just had a conversation about that on Monday, and we were asking the same thing to our boss on this program. And I think the answer is yes, but I can circle back to him today because that's so funny because that was the exact question. And then I can let you know or send it to you, Craig.
And Kimberly Perez, John Evans wrote in Pioneer Lending is a single mobile home user. And Candace, why don't you type your number in the chat to everyone?
Yep. All right, to everyone.
There you go. I love the collaboration online. It's so cool.
Yeah.
We had over 80 people on today, so that's a very interesting topic. Okay, so there's Candace Blackburn, 813-732-2606. Candace, as always, is a pleasure. It's great to have you as a guest.
Yes. What's a credit score for no money down? We've
850.
795. It depends upon the client, but I mean, I've seen it as low as 660.
Wow.
Goes back to DTI. How much skin is in the game?
There's just a lot of factors, guys.
It always is. Oh, I'm so glad, Tammy. Yeah, I'm happy to help, Craig. I told you before, I've got a whole bunch of classes and slideshows ready to go. Anytime you want me on a Thursday morning, I am yours.
Cool. Well, thank you for your education. It's very helpful.
Yes, thank you. Good times.
Tammy said it well. This has been great. Thank you, Candace.
Yeah, thank you. Oh, there's Sarah. Hey, Sarah. Talk to Sarah. You're welcome.
Cool. 9:28. We finished 2 minutes early. Yay. All right. Zillow team, I'll see you at 10. I got a 12, a 2, a 4, and a 5. So other than that, happy day.
Happy day. Take care.
Thanks all.